how much money do you actually need to live off of your dividends? In today's video, we're going to go over that. What's going on, everybody? My name is Dollar Mike, aka Michael Mitchell, back at it again with another video. Yes, we're going to be talking about dividends once again in today's video. We'll go over dividends in general, how much money you actually do need to invest, where you should go ahead and invest your money to actually get that dividend income, the risk factors involved with all that, everything you would need to know to get you started. So let's not waste any more time. Let's get right into the video. Let's go. If you guys don't know what I do around here, I make videos talking all about personal finance. So all types of personal finance content regarding investing, budgeting, credit cards, everything related to money, I got you covered right here on the channel. So if you want to check any of that stuff out, make sure you check out the rest of the channel. But of course, today's topic is dividends. So the first thing you're going to need to do if you need to figure out how much money you actually need to go ahead and live off dividends is find out how much money you actually spend every single month. So find out your monthly budget. What are you actually spending in expenses every single month, and then add that up over a course of 1 year, and that's how much you would need in dividend income for at least this year alone. Now, your monthly expenses could include a car, it could include rent, or maybe a home loan, it could include student loans, it could include other bills like gym memberships, anything like that. You need to add all those up, find out what your actual monthly expenses is, and that's how much money you're going to need month to month and over the course of a couple of years if you actually go and acquire those type of things, or maybe you get married, or maybe you do something else, maybe you buy your second home, any type of form of debt that you have to go ahead and repay. All that has to be calculated back in to figure out how much money you're going to actually need every single year in the form of dividend income or passive income. Whatever type of lifestyle you plan to live now and in the future, you need to figure that out, find a solid number to run with, and then we can actually run those numbers. If you're living on your own, $40,000 a year in passive income you're not doing anything for, is pretty solid. But if you're living and you have a family of four, then a passive income source of $40,000 probably isn't enough. You might need something around like $200,000 or $300,000 in passive income every single year. So it all really depends, but we're going to get into all that right here. So what exactly is a dividend? A dividend is the distribution of some of a company's earnings to a class of its shareholders as determined by the company's board of directors. So in simpler terms, when you buy some stocks on the stock market, they offer something which is called a dividend yield rate. That dividend yield rate is the actual rate of the amount of money you're going to get paid out depending on the price of the share of the stock every single year in the form of passive income. If the company you're invested in is getting profits, doing well, beating their earnings and whatnot, you might get back a payment every single month or every single quarter in the form of a dividend. This is a basic thank you for investing with us. Here's a little bit of our profits. Hopefully you can turn that into a lot more down the line. Let's use a company like 3M, for example, ticker symbol MMM. 3M makes tons of different products from abrasives, tapes, personal protective equipment, home filters and such, films, sheeting, and medical equipment. On top of that, they have over 100,000 patents, so they're the real deal, and they've been around for some time, paying that dividend, that consistent dividend, for over 20 years straight. The current stock price of 3M as of recording this video is $201 a share. They have a current dividend yield of 2.96%, and with that dividend yield, they're going to pay you out roughly $5.92 just for holding one share over the course of 1 year. And you may say, Mike, come on, I'm spending $200 for a share of 3M and I'm going to get back roughly $6 every single year in the form of passive income. That doesn't really sound like a good trade-off to me, but hold on. It's a whole bunch of powers that work with dividends, the power of compound interest and everything. So we're going to get into that later in this video, but just stay tuned. I'm telling you, stay locked in. But as I mentioned before, dividends are typically paid out either every quarter or every single month. So in this form with 3M, it's paid out every single quarter. So that $5.92 that you would receive in the form of a dividend will be split up over 4 payments across the entire year. And if we go look at some of my dividend payments that I've actually received from 3M, you can see I was paid here on June 12th of $1.09, then paid again on September 14th, December 14th, March 12th, and then again June 14th of this year, all reinvested back into the stock. When you reinvest those dividends back into the stock that originally paid you out those dividends, that is considered the process of DRIP, D-R-I-P, or dividend reinvestment plan. So this way you have two separate options. You can either be paid out every single month or every single quarter in the form of a dividend, and that'll just be passive income for you to put in your bank account or do whatever you want to do with, maybe put it towards another stock, or you could have DRIP turned on and have all those dividends reinvested back into that stock to make you even more money the next month or the next quarter, to make even more money the next month or the next quarter, and it goes on and on, overall just compounding on top of each other. And that's exactly what you want to do if you want to build up a portfolio that allows you to have passive income when you get 30, 40, 50, 60 years old. And that could be in the form of passive income of 30 to however much money you plan on putting in. It could be $30,000 a year, $100,000 a year, $1 million a year. It all comes down to how much money you actually have invested and how much money you're actually gaining or receiving in the form of dividends, on top of solid dividend growth and the price of the stock actually going up naturally. But you also may ask, what type of dividend stocks do I actually buy, or what dividend stocks in general should I buy to go ahead and reach these points where I can make a lot of money in passive income every single month or every single quarter? And you can go ahead and do that. You can go ahead and buy individual stocks like 3M or Exxon or Apple or Johnson & Johnson, or you could simply invest your money into a basket of funds, also known as an ETF. I made a video talking about it right on up there, but also known as an ETF, where all those stocks are actually put all into one single stock, so you have to go around and hunt for all these different dividend stocks. It's all right here for you, and you can put your money in one single fund instead of investing it in multiple different stocks that you might not know that much about or really care to do any research about at all. Some great high yielding dividend ETFs you could put your money into is ticker symbol SPHD, ticker symbol PEY, and also ticker symbol VYM. I believe that's a Vanguard high dividend ETF fund. So one of those three, all solid. There are more as well. You can do your research and find out which one works best for you, because they're all, at the end of the day, pretty diversified portfolios that offer you different types of stocks that all pay a solid dividend with solid growth over time. That's exactly what you want. Now you may think, well, Mike, why can't I just invest in a single stock that pays me a solid dividend? It looks like they have pretty good growth. They've been paying the dividend overall pretty consistently over the course of the last couple of years. I don't really see any overall issue. And the issue with that is that you're only investing in one stock. You need to make sure you're diversified, because you don't know what could happen. And of course, last year was the best example of what could happen as far as the entire stock market goes and the entire world goes. The key factor with dividends is that dividends aren't guaranteed. A company decides whether or not going to pay out a dividend, and if their company is not doing that well, then they probably wouldn't pay out a dividend. They probably wouldn't give you any money if they're not making any money. It doesn't really make much sense to do something like that, because overall they would need that money to keep the company alive, versus giving you, the investor, a dividend simply because you're invested in them. And two perfect examples of this when the pandemic actually hit was Disney and Boeing. Before the pandemic hit, Boeing stock was actually paying a dividend and the stock price was trading somewhere around $300. After the pandemic actually hit and the market took a crash, Boeing stock dropped all the way down to about $95, and they also completely cut off their dividend. So currently, to this day, Boeing is still not paying their dividend. Boeing has not paid that dividend since February of 2020. As far as Disney stock goes, the stock price of Disney was trading around $130 to $140, and when the pandemic actually hit and it reached its lows, it was trading at about $85 a share. And since that $85 low, the stock has been way up, but Disney has also cut their dividend completely and has not paid that dividend out since December of 2019. Both Boeing and Disney, I personally believe, are great long-term investments that should definitely be in your portfolio if you're looking for some solid long-term investments. But the problem with that is, if you were simply investing in Boeing or Disney and you actually lost out on the dividend because they stopped paying it, and you actually sold as well on top of losing on the dividend because they weren't paying a dividend, so you decided to sell, then you're losing out tremendously, because you probably took a loss on your money and you're also not receiving a dividend anymore. Basically, all your dividend money is cut. But if you had a diversified portfolio of dividends, then that probably wouldn't be too much of an issue for you when the pandemic actually hit. And things like this simply can't be predicted, so it's better to be safe than sorry. And overall, to be safe than sorry, you need to diversify your portfolio, or go ahead and invest in one of those ETFs that's already diversified for you. Now I want to mention one more thing before we actually run on over to the dividend calculator to see how much money you exactly need to make whatever amount of money you need to make in passive income every single year in the form of dividends. And this is pretty important. Typically, you might see dividend yield rates anywhere between 3 and 5%, but of course there can be stocks out there that have dividend yield rates of 8%, 9%, 10%, above 10%, in between 20%, and sometimes even 30% dividend yields. When you see a dividend yield over 5 or 6%, that could be something called a dividend yield trap. Overall, they're trying to get you into the stock, they're trying to get you invested into the stock because you're only looking at the dividend and don't actually know anything about the stock or even know if they're actually paying that dividend out. They might not pay that dividend out consistently, and if they're not paying it out consistently, then you're not going to make consistent money. If you're not making consistent money, then there might not be even a point in investing in that particular stock. And like I said before, they might not even be paying the dividend out and still say they offer a 10% dividend yield or whatever the dividend yield may be. Now, I've made videos talking about this in the past. Check out my risky dividend stocks to actually see if you want to invest in any of those risky dividend stocks. I personally do have a couple of risky dividend stocks on my portfolio. One pays about 9%, the other one pays about 11 to 12%. But then again, I'm also looking at these stocks a little bit more than I would look at a regular stock, just to make sure they're actually paying the dividend out, make sure the company's actually making money, or however they make profits, they're actually making profits. And all in all, if they're paying me a consistent dividend and it's going to be 10 or 11%, I'm going to take it. But generally speaking, if you see a dividend yield that's really high, just proceed with caution, do your research, make sure they're actually paying it out, and you should be all good to go. If they're doing all that and they're paying it out, no worries there. Go ahead and invest and get that dividend money. But if they're not, then just a little bit of worry. Just putting that out there for you, just letting you know. Overall, if you want to play it safe, definitely just check out those dividend ETFs. Look up Dividend Aristocrats on Google, and also look up Dividend Kings on Google. Basically, Dividend Aristocrats, they've been paying us a consistent dividend, I believe, for over 25 years. And then Dividend Kings, they've been paying a consistent dividend for over 50 years. So two type of dividend things that you can go and look up to see if you're actually interested in investing in companies like that. And if you are, they're pretty safe. Overall, you want something that's safe. You also want to make a lot of money as well. So it's a balance there. So you can have a lot more. You can have like 90% safe, maybe 10% risk. Personally, up to you. Whatever your risk tolerance is, you can do whatever you want to do because it's your money. But either way, let's run over to the dividend calculator and see how much money you actually need or how much money you could invest to see how much you would receive in the form of dividends every single year over time. So now let's do a basic overall dividend calculation to find out how much money you'll actually need to go ahead and make money in passive income in the form of dividends every single year. Maybe it needs to be 30,000, 40,000, 50,000. We'll find out how much you need or how much you can get right here on trackyourdividends.com. I actually use trackyourdividends.com. They don't pay me to say this, but I actually use it to track all of my personal dividends. It's a great app. It's 100% free. They do have a paid option if you want to use it. Make sure you check out my video. I did a full-blown video talking about it. But let's just go on over to the dividend calculator section of the actual website. Scroll on down, and right here we can see where the dividend calculator is, and we're going to start with the starting principal. The starting principal is simply how much money you're going to start with. You can start with $0. That's perfectly fine. I'm going to go ahead and put in 1,000. So let's just say we start with $1,000. Past the starting principal, we had the one below it, which is monthly contributions. Monthly contributions is simply how much money you're going to put towards that ETF, that stocks, or whatever amount of stocks you go ahead and buy. In this instance, let's say we go ahead and put $400 a month towards that ETF or the amount of stocks that we actually have in our dividend portfolio. Past that, we have the annual dividend yield. The annual dividend yield on average is anywhere between 3 and 5%. Overall, the dividend yield is that dividend yield that you're going to get from whatever stock you want to decide to go ahead and invest in. So let's just lowball. Let's say on the low side, 3%. Like I said before, I do have dividend yields that pay me 11, 12% every single month, but on average, that's not really normal, and also it's not really sustainable long term. So like I said, on the low end, let's go with 3%. Past that, we got the dividend growth rate. The dividend growth rate is overall how much the dividend is actually going to increase over time over the next coming years. 10 years, 20 years, whatever. Either way, we'll do an average one right here. On average, I think it's anywhere between 3% and 6%. So let's do low again. Let's be very conservative about all this. Let's do 3% once again. Past that, we have the annual share price growth. And on average, share prices typically go up anywhere between 5 and 7% every single year. Sometimes you can get a nice return. I got a 50% return on my Robinhood portfolio last year. On my Acorns portfolio, I got a roughly a 19-20% return. So obviously, whatever the price of the stock actually goes up by, that's how much return is considered a return. Either way, on average is 5 to 7%. We're going to be conservative. We're going to say 5%. But I personally never received a 5% return. I've always got way more than that. So just, grain of salt. Past that, we're going to do number of years. Let's just change this to 50 years. We're not going to be investing fully for 50 years, but we can just have 50 years set up so we can see how far we are along with 50 years in the calculation. And let's go ahead and click calculate. So once we do that, if we scroll on down, we can see it right here. So in the first year, with your $1,000 invested, you're going to make about $30 in dividends, or basically $30 in that entire year. Past that, you can see the next year, with the $400 invested every single month, we're already up to $182. After 5 years, we're at $781. You may say, okay, well, it's not really moving that much. But if we scroll on down, let's look at 15 years. 15 years, passive income, $5,849. If we scroll down even further, we got 20 years in. 20 years, $12,000. Let's go down to 30 years. 30 years, $54,000 in passive income. Overall, if you go on over to the right side of that, you can see the total portfolio value after just 30 years with basically all conservative settings is a little bit over $800,000 at $832,655. And like I said before, this is conservative. This is not normal in my sense. Overall, I invest in a lot higher dividend yields. They offer minimal risk because I don't put all my money into those risky doings. But overall, since I've been investing in the stock market, I've received at least a 7% return on my money. So like I said before, all this conservative. If we scroll on down at 50 years, if you want to just look at 50 years, we can see we're going to get well over $1.6 million in passive income, money that you didn't do anything for at all except put your $400 every single month in. You do that for 50 years on those actual type of returns, the conservative returns, and that's what you'll receive. Overall, a $14 million portfolio, almost a $15 million portfolio simply off of dividends. So that's just one simple thing. I've seen a lot of people, let's scroll back on up. I've seen a lot of people actually go ahead and say they'll invest more. Let's see what it's like if I go ahead and let's start with $0. Let's start with $0, and let's go ahead and say I'm gonna do $500 a month. And then the annual dividend yield, let's keep that the same. The growth rate, let's keep that the same. But the share price, let's increase that to 7%. So 7% returns every single year. And let's actually also boost up the growth rate of the dividend to 4% instead of 3%. Calculate those returns. And let's see what we got. The first year, you're not going to make anything back because you just put the money in. Second year, 187. Let's scroll down to 10. 10 years, $3,000 in passive income. 20 years, $24,000 in passive income every single year. At least $24,000. It's a lot of money. Just saying. With that drip turned on, it's all going to get reinvested like all of these will be. And we scroll down even further, we can see after 30 years, $158,000 in that single year in passive income. This is as simple as it gets. Compound interest, this is the magic of compound interest. You go ahead and put your money in, you let it grow, you let it do its thing, and it's all hands off. You don't have to do too much. Now, like I mentioned before, I don't know how much money you would need in your dividend portfolio, but just looking at that, just looking at the basic example, that's how much you can receive if you invest $400 a month and $500 a month. Maybe you invest more, maybe you invest a little less, maybe the market goes up a little bit more, maybe it doesn't go up as much, but overall we did pretty conservative things and we still received a solid amount of passive income after about 30 years. And like I mentioned before, you don't have to wait 30 years. If you want to invest more money, you can get there way faster. If you want to take more risks, you can also get there way faster, but it's either going to be more money or more risk. Which one ever works better for you, that's personally up to you. I can't tell you what to do, but overall, I can provide you with the information. If you want to start your own dividend portfolio, you can do it on just about any trading app. Personally though, I recommend M1 Finance, and if you sign up with my link with M1 Finance down below, you'll get a free $30 to go towards your portfolio. Basically with M1 Finance, you can go ahead and create your own pie, so you can go ahead and invest in a ton of different stocks, and all the money you push to M1 Finance would then go and be invested automatically. So if you had 4% of your money you wanted to go to Apple, 16% of your money you wanted to go to Tesla, you could do that, and all you have to do is put in the money. They would do all the hard work for you. They would do all the calculations for you. Simply you invest the money, they handle the rest. So, and that's all free as well. So check out M1 Finance. If you want to use other apps, you can use other apps as well. I have mine on Robinhood, but it doesn't really matter where you do it. The whole point is that you're doing it. The whole point is that you're making money, you're getting passive income, you're building a portfolio, and you're trying to, live life. Have a life when you're actually done with life. When you don't feel like working anymore, this is what you got, and this is just one portfolio for you. So that's all. I already have tons of dividend videos on the channel, so if you want to check those videos out, then check them out. I do monthly dividend portfolio updates every single month at the beginning of every single month, so make sure you check that recent one out of my $29,000 Robinhood portfolio. And yeah, that's pretty much it. If you guys enjoyed this video, make sure you hit this video with a like. If you want to see more videos like this, then definitely just drop a like, drop a comment. Definitely just hit that subscribe button and notification bell. If you want to talk about dividends more with me and with some of my other subscribers, then check out the free Discord link down below. 100% free. You join the Discord, simply talk to me and everybody else about dividend stocks. I enjoy talking about dividend stocks, and they do too in the Discord. And we also talk about other personal finance topics in there as well. So options, investing, credit cards, budgeting, all that kind of stuff. It's all in there for you. And I also have a Patreon, so if you want to support the channel even further, you can check out Patreon as well. And that's pretty much it for the video. I hope it's not too long for you guys. I hope I taught you guys something new for today, but that's all I really have for today. So I'll see you guys in the next video. I'm out. Take care of yourselves. Dollar Mike. Peace.